Hi, everyone. I hope you're having a wonderful week. It's been a while because I was in Antarctica, and it's been over a year and a half, a year and 2 months since we did Ask Me Anything question. Je vais de l'eau, mais quoi? And Ask Me Anything episode. So I asked the audience for questions, which I've compiled. And the number one request is that François, my son, who's now 20 months old, makes an appearance. So we'll see how long he'd last because that's super interactive for him. But it should be fun. Now bear with me as I speak to him only in French. François, dis bonjour aux gens là. Bonjour.
Bonjour.
Voilà. Tu vois, il y a papa et papa sur l'écran. C'est rigolo. So we'll be covering a lot of the questions that were submitted. Obviously, feel free to comment along and feel free to send questions along the way, and and we'll take it from there. So, without any further ado, let's get started. Welcome to episode 41, Ask Me Anything. Alors, il parle que français d'ailleurs. Non, il parle français et anglais, mais je lui parle que en français. So the questions I received really fell into a bunch of buckets. I got a lot of questions about my experience in Antarctica, so I'm going to talk about that. I got a lot of questions about marketplaces and the latest trends in marketplaces. I got a lot of questions on startups, and I got a lot of questions on macro and where we stand, and then just general questions in general. And if François gets too distracting as he's playing with his little cars, let me know and I'll take him elsewhere. But he is adorable and super cute and usually likes watching me take calls, investment calls, etc. So, Antarctica. Anne asks, was that frostbite on my nose? Crash. So, first let me show you what she meant by that. I came back and I had a frost nip right here, here, and here. So it's not frostbite, it's frost nip, which is better in the sense that it doesn't have long-term impact, and it healed. After a few weeks, it just peeled off and it was okay. But as soon as it gets it's negative 30 there, and it goes to negative 50 with the wind chill, which means any exposed skin basically immediately freezes. Which means that you had to be covered at all times. C'est la voiture d'Ino, elle est tombée. Et voilà. So you basically... one second. The focus went off for some reason. Okay, little technical issues. Very odd. Usually this fixes it. Weird that it's rather blurry. I'm not sure I can fix that. Very odd. One second. Let me see if I can fix the blurriness. There. Fixed. Okay. Very odd. Anyway, this negative 50, which means any part of your skin that's exposed to the cold basically freezes instantaneously, which means you need to be completely covered. So let me see if I have a photo of what you kind of look like while you're walking, etc. in these types of temperatures. So 1 second. Let me get the last degree. Yeah, this is a good representation. And then let me share that screen. So move it over here. Copy. And then I'll talk about the experience, at large. So this is what it looks like. So you can see, your entire face is basically covered, and you're wearing 5 layers to make sure you're okay. Okay. So continuing the questions, do I still have my fingers? So I'm very happy to report that I didn't get frostbite, though multiple times. By the way, is having François there too distracting, or should I keep him because he is talking and making noise? So let me know let me know either way. But it is adorably cute. He's playing with dino cars and police tow truck et la voiture de camion de pompier. Oui, et le dump truck qui est là. So we multiple times my fingers froze. But I could still feel them. So you have tremendous pain as you're cold, despite having glove liners, hand warmers, and mitts. But they never go to the point where you don't feel them. The issue is if you stop feeling them, that's actually when you know it's a problem, because then, because then then you're gonna get frostbite and not just frostbite. That said, I came back January 15, and I pain at my fingertips for multiple weeks, and after a few weeks, my fingertips all peeled off completely, which was a bit of a disaster. But ultimately, turned out it was okay, and so I have all my fingers. Now, Sarah asked, so that question of my fingers was asked by Christopher. Sarah asked, is there a noticeable climate change? So it kind of depends where. Where we were, and let me show you a map of Antarctica. So in Antarctica, where we were, so the South Pole is here, and all of this is the East Antarctic ice sheet, which is a polar plateau. There's basically 10,000 feet of ice. It's the highest, coldest, driest continent. And there's no noticeable climate change at all. And that's where most of the ice is, by the way. And on the world level, it's about 90% of the ice is in Antarctica, 9% is in Greenland, 1% is in the rest of the world. So here, where most of the ice is, there's no climate change. That said, where the ice is much thinner on the west, all of here, you are seeing climate change. The sea ice is retreating, and the glaciers here are all melting pretty rapidly. So there is concern that these shelves might break off and might melt. But obviously, it would be less catastrophic that if you started seeing it where the 10,000 feet or 3,000 meters of ice is held, which is here. Next question is. What was the most intense experience there? Well, the reality is the entire thing was extremely intense. Way, way harder than I expected. And I got really fit for this. And it was probably the hardest thing physically I've done in my life by far. It didn't feel like a lot. You're walking 120 kilometers over the course of 10 days. And I'm like, that'll be super easy. Barely an inconvenience. C'est tombé, hein? Le camion pompier. Turns out that when you're doing that at 10,000 feet, it's when I go down that it didn't zoom. When you're walking at 10,000 feet altitude in -30 with wind chill at -50, 8 hours a day, where you're basically burning 7,000 calories a day between the 2,000 for keeping you warm, 3,000 for the hiking, 2,000 for just living. You're exercising 8 hours a day. So in the morning, you wake up at 7:30, you have breakfast, you pack up your tents and your camp. Let me actually show you what that kind of looks like. So this is our tents where we're staying. So you pack up the tent and then you're walking. And when you're walking, it looks like this. So you're basically walking. It looks like this. And let me see if I can fix the camera head again. The focus. Okay. So it looks like this. As you can see, it's like it feels like you're walking on clouds, and there's nothing in any direction whatsoever. It's totally a desert, and so you're alone with your thoughts. It's extremely intense in the sense that you're walking for 50 minutes, then you take a 10-minute break, And during that 10-minute break, it's very important that you eat and consume calories as much as you can. If you do not consume that, you're going to be in a hypoglycemia, and you're going to essentially pass that. And one of our team members didn't eat for 3 or 4 sections, and essentially, was the hardest day of his life, even though he was like, 25 and probably one of the fittest amongst us. And it was like the hardest thing he ever did. Let me show you a video of what that looks like as we're walking. Regarde. C'est rigolo, hein? Ça, c'est nous en train de marcher en Antarctique avec les drones qui nous suivent. Oui, hein? Oui, on est en train de marcher. Marcher avec des skis. Avec des skis, exactement. So as we're doing that, so we do that for 15 minutes. Then after we do that for 15 minutes, we stop, we eat and rest for 10 minutes. And we do that, we walking in 15 minutes. We do that 8 hours a day. So you end up doing 18K a day on average. But as I said, these in these conditions, at this altitude, with this cold, it's really hard. And there are a lot of things you're not used to. It's sunny 24/7, which means that sleeping is really, really hard because you're not used, despite having a face mask. You still have like light seeping in. You're not allowed to leave any traces behind. There's no life there, so there's no insects, there's no animals whatsoever in the polar plateau. Yes, you have like seals and orcas and penguins, but that's by the sea. We're in the middle of nowhere, thousands of miles in. So for instance, you have to poop in a plastic bag the entire trip, and you carry that with you the entire time. So it's extremely unpleasant. You're literally freezing your ass off. So it's really intense. And I guess the most intense part, to answer Sarah's question, is probably the days where it was windy, and the days where it was cloudy or foggy, not cloudy, because then it was significantly colder. It felt significantly colder, and it made everything harder. The tent was a lot colder in the morning when you woke up. Everything, was hard. Literally, probably one of the hardest things I've ever done in my life, to the point that despite being really fit, it required mental fortitude and perseverance to make it there. But ultimately leads to extraordinary gratefulness, right? You're grateful for the team you're with that supports you, for the team leaders. You're grateful to be in an opportunity to be in this environment, which is unique, where you're alone with your thoughts. So it's kind of like a Vipassana retreat that you're doing, even though you can also talk to your partners at time. C'est tombé, tout à fait. And oui, Tâté, oui, c'est tombé, c'est de retour là. So extremely hard. Oui, tombé, mais je préfère que tu le fasses pas tomber quand même. So Luke, for anyone thinking of following your footsteps in Antarctica, what would your advice be? What would you have done differently to prep while there, etc.? I actually prepped properly. I went to Norway and Finse to train for this. Where learned to set up a tent, how to pull the pole, how to pack properly, how to heat the food, etc. I got really fit. I lost like 25 pounds before the trip, and I was exercising several hours a day every day. I started lifting weights 3 times a week. I'm not sure I would have done anything differently. And once there, after a few days, you actually learn how to deal with the environment. You get better every day. Right? Every day, the first day it takes you an hour to set up camp and then put it and take it down in the morning. The next day, 45 minutes. By the end, in 30 minutes, you got the strap. Same thing. How to deal with the cold. You don't want to sweat, because if you do that, you're going to get cold when you stop. And so the first day, my fingers were frozen. And then I realized what was the correct combination of liners, hand warmers, and gloves, and how to stay warm during the breaks and while hiking, which worked really well. So not sure I would have done anything differently. Question, of course, is would I have done the trip had I known how hard it was? TBD. I'm definitely not doing that again. I'm glad I did it. It was a once-in-a-lifetime experience. Now, I will do many more adventure trips in the future, but, don't need to do that. It was extremely hard, though. Again, made me grateful for coming back to things like François, whom I missed terribly while I was away for 2 weeks. Hein? Tu m'as manqué? Ouais, tu m'as manqué. So happy to be back with François. Oui! And things like indoor plumbing or... Oui? C'est un tow truck? Oui. So things like indoor plumbing and heating and restaurants and great food. Dump truck. I mean, the rehydrated apocalypse food is definitely not the best. Wait, un camion pompier. Oh yeah, that's true. That's true. De Niro. We were pulling 100 pounds of gear. Dino, oui, c'est un dino, c'est une voiture dino. 100 pounds of gear, which is really, really, really hard. Et ça, c'est un chien. Tu veux le chien? Okay. Okay. Let me go through the questions people left to see if anyone put more comments on Antarctica, and then I'll answer the remaining questions. If not, I'll okay. So Jeff, is there a way to do a similar trip on a budget? The answer is yes, actually. Just don't go to Antarctica. So Antarctica is extraordinarily expensive, and the reason Antarctica is extraordinarily expensive is when you go to the Union Glacier, which is where you do the prep, it's kind of 1-for-1 staff to gas ratio, and everything is flown in, put together, and then flown out and taken apart. So, and the season is really short. It's mid-November to January 20th. So it's a 2-month. It's a 2-month season. It's a 2-month season, so it's very short. As I said, like they come in November, they build the camp, etc. Then they fly everything in. But everything you do, like if you're in the Union Glacier, when you go to the restroom, they fly it out as well. So it makes life extremely expensive. It's also a monopoly by ALE, Antarctic Logistics Expedition. Now, I did it in a even more expensive way because I was part of a scientific expedition, and I was paying for the scientists who were actually doing a lot of the tests, etc. We were testing how people deal with extreme environments. So that made it doubly or triply more expensive in my case than it would normally be. It's still at least $50,000 for a trip like that. So the alternative would be to go to Finse in Norway, which is where I did my training, and there you can do a lot of the same things. You can pull your polk and train for this without. C'est that, François? So you can train. You can do the same thing, except not on the polar plateau, not in Antarctica, but a very similar experience. It was extremely hard there as well, going up and down, doing 25K every day, etc. What would you not do next time? Well, I'm not going back, so I'm not doing it again. What's your next big adventure trip? So I don't know. I do a lot of these adventure travels. I crossed Costa Rica on bicycle, mostly from the Atlantic to the Pacific. I went to Guyana and I hiked. I walked from the gold mines to Kuiper Falls and camped there. I did the Annapurna Trail in Nepal. So I do a lot of these adventure travel trips, though mostly in hot weather. I am thinking of going heli skiing the Himalayas, so not necessarily, but I've done a lot of Himalayas hiking, etc. I mean, Annapurna is in the Himalayas in Nepal. I haven't decided yet. It'd be fun if I could take François and like put him in the pack or something like that, as opposed to one where I leave him behind for 2 weeks, which is a little bit heartbreaking. So we shall see. I usually do one of these trips every year. So obviously in 2022, the trip was training for this in Norway. And then I went heli skiing in Sweden, where I took François in a Heist hotel. In 23, of course, it's Antarctica. We'll see what 24 brings. But life brings a lot of these opportunities. Like, I don't have a plan or a bucket list. I didn't even know this was a possibility until Kevin Ryan suggested I do this about a year ago, and I'm like, okay, I'm in. Oui, ça va? So we shall see. La voiture dit no. When space. La voiture dit no. So. Un chien? Oui. So I did the zero gravity astronaut training program in the zero gravity plane, the Vomit Comet, which is fun. You do I think I don't remember the number of parabolic drives, but you do like 7 minutes of zero gravity. I think 45 a second zero G, like 14 times or something like that, which is actually more zero G than you get on the
big bubbles.
Ça va? On the Virgin and Blue Origin. So these are not real space. I think I wouldn't do space until you can really get to real space. And there's something interesting to do there. So it'll be a while. Like just going up for 3 minutes, in zero G and looking out the window, not super compelling. I like to do things that are physically engaging. Just being strapped in a rocket, not super fun. Kind of the reason I don't love skydiving. I've skydived many times. Like you're just falling, and yes, maybe if you get really good, it could be fun, but not really into it. So TBD. So space, not anytime soon, probably. Oui, ça va? C'est le chien. Il est là le chien. Tu montres le chien aux gens. C'est le chien. Okay. What's your motivation for pushing your body to its limits? Oui, c'est le chien. Okay. You know what? Maybe I'll take François out for a minute. This way, we have a more quiet experience. Allez, viens. Allez, down. Allez. Au revoir. Bye-bye, François. Bye-bye. Okay. So to answer the question, what's your motivation? I think it's just fun. It's interesting, right? Like this is what life is about. It's about having experiences, and some of these experiences, and also like if you don't have the lows, it's hard to have the highs, right? So understanding your limits is interesting, and I think it goes to the point of purpose in life and meaning. We get meaning out of things that are complex and difficult that we actually accomplish. And so I don't know. It's fun. It's interesting. It's challenging, and it gives you purpose and frankly gratitude. Gratitude to be able to experience these things. But I think it is actually part of the meaning of life to have experiences, and whether they be these types of adventures, or being a parent, or being a founder, etc. So super fun. Okay, so let me switch to marketplaces, which is question or category number 2. Jeffrey, trends on marketplaces and fintech, and how is the market about this type of business of assets to invest in early stage and angel investor during this macroeconomic downturn? Marketplaces, for the most part, haven't been that impacted by the downturn, in the sense that I think it's still an amazing time to build them right now. If anything, it's less competitive. So you're not facing 27 clones, which is good because these things take a long time to build and to get the network effects going. Fintech, and by the way, a lot of fintech are marketplaces because they're intermediaries between providers of capital and borrowers of capital. Those have been much more affected because a lot of the models of these fintech were created, or the underwriting models, during better times, and so many of them underestimated the level of losses they were going to face as the companies, as the market went south, and at the same time, the cost of capital is going up because rates are rising. So unless they're passing through their cost of capital intelligently to their customers, they're doing badly, and when they do pass it through, the demand for these loans decreases. So the fintechs are not doing well in this market. The prop techs either, by the way. Marketplaces and other categories are still doing pretty well, though it's harder to raise in the later stages these days than it's probably been in a long, long, long time. Lewis, and actually I think someone asked the question here as well. Oh, it's Lewis. Yes. You'd actually sent the question, Lewis, before, but you're asking it again. What are my thoughts on live shopping marketplaces? It's actually interesting. Live shopping marketplaces are huge in China. They're 25% of e-commerce purchases are done through live shopping. And massive category, typically dominated by the incumbents. So Taobao Live, which is Taobao being the consumer-facing version of Alibaba, and they're the dominant, eBay type site in the country, and their live shopping experience is one of the dominant players, and so it's dominated by the dominant players. It took a long time to start taking off in the U.S., but it actually started taking off now, especially in the collectibles category with Whatnot. And one of the biggest trends of late has been live shopping in certain verticals. Actually, let me share a slide that we put together of what are the latest trends happening. Now, Whatnot is probably the leading example in the category. They're not amazing examples. So it's a few things. It's taking a lot longer to take off in the US than it has in other places. And so far, it's only really working in collectibles with Whatnot. And even then, I don't know how well the unit economics are working. So I haven't looked at their retention, their AOV, their customer acquisition costs. So I don't know. I know they have a lot of traction from a GMV perspective. But one second, let me see if I can full screen that here. Okay, perfect. Let me now share that screen. Okay, wait, I can't see what I'm sharing. Perfect. So you do have a number of players in the category. Whatnot is the best example. They probably ran $2 billion in GMV. Again, I don't know how well they're doing from a unit economic perspective. There's a bunch of other players in different verticals, but still reasonably early, but definitely one of the mega trends. Yay. Keep going. Gustavo, why doesn't OLX have a feature such as Kishiji's notify me when new ads are posted? I'm a customer and a big fan of OLX Brazil, but the lack of this feature drives me nuts and forces me to scrape this website daily using third-party services. Why don't most other marketplaces offer it? So it's a power user advanced feature. I use it all the time on eBay to find items I'm looking for. Now, we had actually tested this on OLX back in the day, and a tiny percentage of power users were using it, but not most people were not. And finding an exact match, so it's actually a difficult matching in a classified site where every posting is unique, like OLX. It's actually really hard to match what you're looking for what people are posting and not send you bad matches. And also, we want users to browse. We want people to, because there's so much serendipity. Like they come in looking for whatever, a cell phone, and they end up buying a video game. And so because most users don't use the feature, and because our business model is also, and people like clicking on the ads, and we want people to browse to like lead to serendipity, most sites don't use it. Now, if you have more structured categories and defined items like eBay, it actually makes sense to have. It didn't make sense. It's probably something that they should revisit because now customers are more sophisticated and the AI can actually be a lot better in terms of matching what people are looking for and what we have. So probably something that should be revisited, but there is a logic it wasn't there in the first place. Jean-Baptiste, in terms of real estate, what are the PropTech models that are functioning? First of all, right now, PropTech kind of sucks because in a rising rate environment, real estate doesn't do well, and we're going to see a decrease in real estate prices, and home affordability is declining. That said, there are many models that are functioning. Now, the obvious ones are the listing sites where you find what you're looking for. So Zillow, Trulia would be an example in the US, and it's even more powerful in countries without an MLS because then the dominant real estate sites are extremely profitable, and that's true of many of the OLX vertical real estate properties. Number two model, of course, is the Compass model, which is a tech-enabled broker model. Now, it does well, but it doesn't have the multiples of a tech company because, of course, it's an agent model. So it does well, but and obviously it's meaningful. It's a publicly traded company, but it's not going to get the multiples of whatever Google from a margin perspective, which makes sense, and that's totally fine. Third model, of course, is the iBuyer model. This one, the jury's more at, right? The open door in the model of the world. The question is, how well does it do in a downturn? The early evidence is they didn't do their pricing perfectly well, so TBD. That said, the value proposition becomes stronger in the downturn where people do want to get to sell their items. So unclear. Jury's still out on this one, but there might be something there, a way to make it work. But that said, prop tech is a much larger category than that. I mean, arguably, Airbnb falls into prop tech, absolutely crushing it. In fact, if anything, does better in environments like this one where people need to monetize their underutilized assets. You have a lot of prop tech discovery sites in B2B, companies like Crexy. You have a lot of companies helping people manage their or replacing the managers of the different multifamily homes. So companies like Mind or Belong, or very good models and doing really well. You have even security deposit alternative companies like Rhino are doing extremely well, and play a big role. So, answer it differently. There's so many prop tech models that are interesting and doing well, that I'm bullish on the category as a whole, even though in the short term, I think prop tech is in trouble because interest rates are declining or increasing, which is bad for the real estate market. Let me see if I miss any questions from the audience on marketplaces. Interested in your thoughts by Ter regarding the healthcare marketplace, especially what could be fulfilled via a DAO. So healthcare marketplaces, wonder if many of the like pill packs, et cetera, of the world are in a marketplace model or not. Not sure. I haven't put too much thought into it. Now, healthcare marketplaces, I'd say there are a number that are interesting. You have the Better Help one, so the marketplace for therapists, which is doing very well, or the Talkspace. You have marketplaces for finding. You have B2B marketplaces in healthcare that are doing really well for like finding equipment for your vertical, whatever vertical you're in. So you have things in the dental space. Yes, you have that are doing rather well. You have a lot of interesting companies in the vet space, for instance, as well. We're investors in ScratchPay, which is a point of sale marketplace for financing the medical treatment of your dog or your animal in general. So there are a lot of opportunities. I've not seen anything interesting in the Web3 space. I'm not aware of Oath Health, I have to admit, so I will look into it, and I'm not going to opine until I have more evidence on that. Dasha Timbus, you do remind me of myself in my childhood. Love it. Okay. How would you define, by Roberto, how would you define a marketplace at the highest degree of complexity? So two-sided marketplaces are already reasonably complicated because you need to match supply and demand, and it's very easy to get it wrong. The main mistake people make is they have too much supply, because it's easy to convince people to list on your marketplace if the listing is free, and so you end up with infinite supply. And then you don't have any demand for it. So the supply churns. So it's way better to get the best curated supply that's going to do an amazing job in a very specific vertical or very specific or very specific zip code or geography. Then you get demand for it until you're relevant, and then you keep scaling both in parallel. Now you can make this even harder by going to three-sided marketplaces. So if you think of it, something like DoorDash or Uber Eats, you have the restaurants, you have the delivery people, and you have the consumers, and you need all three to be matched. So you need to have restaurants, and you need to have demand for the food from the restaurants, but then you also need to have the delivery people in the right density to be able to deliver. But you can't have too many of them, otherwise they're not working, and they're not happy, and they're not making enough money. You need to have enough restaurants, but not too many. So actually, it's extremely hard once you get a three-sided marketplaces to match it and make the economics work. But when you get it to work, of course, the barrier to entry is significantly larger. Dasha. It was to say, Okay. Continuing to go through the questions on marketplaces, and then I'll switch category. That's something. Current market size and conditions. Investment in organic product marketplaces. I haven't seen organic product marketplaces. That said, there are a lot of grocery marketplaces, vertical grocery marketplaces that we have looked at. We actually invested in a company called Umami Cart, which is a vertical grocer. Let me actually share their homepage. It's a vertical grocer targeting the Asian category and verticalization across. Share that screen in a minute. Oof. And verticalization is continuing afoot, right? It's one of the mega trends in the world, and it's happening in every vertical, including the ones that were not being verticalized before. Okay, continuing. I mean, just reading the comments, there's a lot of them. Okay. Okay. Mariano. I'm interested in understanding your thought process, feedback regarding how to navigate with investors the duration to build a marketplace or a market. For example, if you're first focusing on one side of the market, and you communicate that with an early stage market investor without scaring him out. When you're doing it, well, when you're building a marketplace, you have to start with one side. You have the chicken and egg problem, so you do need to start with one side of the market. Most marketplaces are demand constrained, so I would go to the supply side because you can convince them they're financially motivated to be there. I would highly curate it and make sure you have the very best ones. Make sure they're happy and they have a great experience, and then you go to the demand side. But you get that within a few months, so I don't think it's a big deal to explain that to investors. I wouldn't worry too much about it. And anyone who gets marketplaces like NFX or us will get that. Yeah, which is what Woku TV says. Are you an Amazon Prime member? What do you think of RX Pass, $5 per month for unlimited generic medications? I am an Amazon Prime member. I think most people are. It's an amazing deal for both free delivery and content. I have not tried RX Pass. Seems like a very good deal, though, and probably better for the world, right? Like, one of my criticisms of one of the things that has been disappointing in the last 20 years is that the tech revolution has not touched some of the biggest categories of GDP, like healthcare, education, and public services, which are ballooning in costs. And I would like to bring the deflationary part of technology to these categories. So I'm beyond excited that companies like Amazon are moving into these categories and helping make things a lot cheaper. So feels like a very good initiative. Okay, that's later. How about prop tech or gated communities in Florida, the marketplace and fintech approach, connecting local business with this community? Maybe. Devil's in the details. That's for later. Still focusing on marketplaces right now, and then I'll move to startups writ large. What do you think of marketplaces like Upwork in different verticals? So that is definitely a trend that is happening. And it's happening in two different ways. So first of all, Upwork requires you to do a lot of work. You say, oh, I need a developer. And you forward this project. And then you get like 50 developers who apply. And these 50 developers who apply, you need to interview them, select them, negotiate, etc. It's a lot of work. And that's called a double commit type marketplace. And that is changing. So let me I share this. Yeah, so that's so one trend is moving away from these double commit type marketplaces where both sides are talking to one where the marketplace is picking your supply. So if you go to rev.com, you don't say I need transcription and you say, I need this transcribed. You don't pick a transcriber; they pick it for you. You go Comet, which is a vertical labor marketplace for computer programmers. You say, this is my specs, and they find you the right person. And this is happening in every major vertical. So verticalizing Upwork makes a lot of sense, and we love vertical labor marketplaces. We're investors in a company called Trusted Health, which is a vertical marketplace for nurses, doing really well. We're investors in WorkRides, which used to be called RigUp, which is a vertical marketplace for oil services workers and also for solar workers. So category we absolutely love and makes a lot of sense. Okay, wait. Okay, that's for later. Okay, so kind of caught up. Currently working in a prototype for an online C2C marketplace. That's Jules. Buying and selling used books with integrated shipping and payment option. Think Vinted by Ford Books. However, very unsure about the unit economics. With transactions, we'll have a lower AOV. There will be higher order frequency. You have College Books with a high AOV, a lower order frequency. How can I validate the quality of the unit economics here? And this is an idea you have thought about as well. So Vinted actually has Vinted is the largest global used fashion marketplace. So they're doing billions in GMV. I think they're bigger than Poshmark, but Poshmark is in the US and Vinted is in Europe, basically. We are investors for a long time. In fact, my right-hand man from OLX, who would be my fixer, is currently the CEO, and we played a role in placing them there. And Vinted is absolutely crushing it. Vinted has a low average order value. Vinted's average order value, I think, is in the $30 range, and they make it work by limiting all their costs. They're free if you wanted to be, but the way they monetize is they have an optional integrated payment and escrow service. Now, the key to make your unit economics work when you have a low average order value, of course, is having a low cost structure and having frequency. So, and actually keeping your customer acquisition costs low. What Vinted, I think, is good at is having low customer acquisition costs. So my big question for you is, how much is it going to cost you to acquire the demand side? And can you make the unit economics work in line of that? The way I validate ideas, by the way, actually I have a Playing with Unicorns episode on that. Let me share my screen for a quick second. I think it's episode 10, which goes through how to validate your startup idea. Second, let me get my blog. Whoops. To my up. Share my screen again. Okay, Playing with Unicorns. And I'm pretty sure it's episode 10, validating your startup idea. And I go through, and there's a full PowerPoint and a presentation, all the assumptions you make and you need to make and verify whether or not the idea is good or not. But I would totally test the idea, and you can test it through, landing page analysis, where you buy ads. I mean, for $500, right? Not a lot. You create a beautiful landing page explaining the product and concept. You see how much it costs you to get people to sign up to a newsletter there, and to see if it works. And based on that CAC, then you get a sense of, you can make assumptions of where the AOV you're going to get are, where the margin structure looks like. Okay, great that you actually have watched that episode. I think you need to do the test, basically, and see if it works. I worry that the AOV you're going to get is not high enough. Like, Vinted is low at $30, but it's $30. If on the books it's $5, way harder to make work, and also way harder to make things like shipping to work. I have no idea, by the way, how big that market is. Like, I switched over to Kindle whenever the Kindle came out. I mean, I read a lot. I read 50 to 100 books a year, but I buy 100% of them on the Kindle. So TBD. I mean, I think I would do use books. I would segment it, to your point, on textbooks and non-textbook, and see how big the markets are. I think Chegg does a pretty good job in the used textbook marketplace, so worth looking at, and I think they might be publicly traded, so probably worth looking at their reports, etc. Okay, Roku TV, good. That's gr- great that if your CAC is significantly lower than the test you did. Okay, let's move to the next category. Startup. Lucian. Do you think the prevalence of unicorns with fully distributed remote teams will increase dramatically in the next 2 to 3 years? Will the physical location of companies matter less and less? So yes and no. There's clearly an increase in geographic in people using remote teams in general, especially when it comes to tech teams. Now, I actually have been building remote or distributed companies from the get go, and I guess I wouldn't call them remote; I'd call them distributed. OLX, we ultimately had like 10,000 employees, and we had 5 in New York, and we were notionally a U.S. company, but we had like the CFO, the CMO, the head of mobile, an accountant, and me in New York. This way, we could raise money as a U.S. company from US VCs at US multiples, but really we were not a US company. Most of the product and tech team and customer service team for a long time was in Argentina and Buenos Aires, and I spend my time flying around the world. This is, at that time, it was exceptional. Now it's becoming the norm where you have more and more remote teams. That said, physical location still matters because capital is still concentrated in certain places. It's still way easier for you to go and raise money if you're based in New York than if you're not. It's still way or in San Francisco. And yes, it is democratizing to some extent, and you're seeing other places like LA, Chicago, to lesser extent Austin, Miami, where you can raise money. But frankly, it's still significantly easier if you're in San Francisco and if you're in New York. And so I suspect people will keep their headquarters and their CEOs close to the VCs, but we'll have more distributed teams. So I think that's kind of the hybrid model people will end up with, because there is density, there is value in being surrounded by other really smart people, right? Like when I'm in New York, I'm hosting intellectual salons, I'm going to tech events. It leads to so many ideas and creativity and investment opportunities. So that's probably not going to go away. Maxime, on which applications do you think AI and Web3 will merge first? So it's happening already. I'd say the first obvious answer to that question is market analysis and quant trading. People have been using AI for quant trading for a long time. We at FJ Labs, by the way, we were pretty big into crypto, and we use a lot of like market analysis. We created dashboards. Actually, I'll share some of those dashboards as a means of making better investment decisions. By the way, both when it comes to, this is our layer 2 dashboard, and we use this both for making investment decisions on the public side and on the private side. Another one of our dashboards. This is going to be open source in the summer, so everyone will be able to access it. So not a huge announcement there, but yeah, people are definitely using it for that. Beyond that, I suspect there's going to be AI-assisted smart contract development, like Codex for smart contracts. Right now, most of the lending happens with over collateralized assets. That's not the way lending works in the real world, right? In the real world, people make a credit, they do an underwriting, and they do an assessment, and then from there, they do under collateralized lending. So I suspect at some point that will come to the crypto world as well using AI. I suspect we'll have, actually, we're investors in a company, which is kind of called Dream by Wumbo. Actually, let me show you my screen again. And what they do is they allow you to create, it's kind of like DALL-E for NFTs, and then you can trade them, etc. So that's an amazing example of using AI, given that you're using the AI to create the NFTs, and then you can buy them, sell them, etc., etc. Okay, back to the questions. Human male. Do you support emerging fund managers? What advice will you give to us? We used to be LPs in funds, especially the funds, especially pre-seed funds that would be a lead gen for us, or in geos where we were not very exposed. So we're investors in angel lists of India, which then became Fold I Fund with UTSAF. This we got better great deal flow there. We invest in Amplify and Forb, which are amazing pre-seed funds. We don't do that so much these days. We're massively overexposed, so tech already. So we don't really support them per se. That said, advice I give to you, yeah, figure out where are you going to get? What's your comparative advantage? What is going to be your differentiator for getting deal flow, for evaluating the deal flow, and for being the most helpful to the founders, and double down on that. Start with a smaller fund and like scale up over time to whatever size makes sense. And you typically start, with friends and family and your own personal capital, and then little by little, you expand to then family offices, and as you scale up more, then you can go to institutional investors. But it takes a while, right? Like we just closed Fund 3, and we haven't yet had institutional investors. We're shooting for that in Fund 4, which will be in 2 years. Go to the other questions in the startup world in the lists, and then I will move to macro before answering all other questions writ large. Would you be interested in investing in a French impact startup that will revolutionize in the urban mobility sector? The answer, of course, that's a question from Eli on LinkedIn. The question is maybe. The answer is maybe. I need more details than that. Send a deck. We'll review. We'll see if what we think of the unit economics, and if it makes sense. And we have a very clear heuristics for whether or not we invest. Is like, do we like the team? Are you extraordinary storytellers who know how to execute? Do we like the business? Or the unit economics good? And in a total addressable market size that's big enough. And if it's pre-launch, or the theoretical unit economics good, and we expect you to have done the landing page analysis, estimated customer acquisition costs, have a sense of AOV and margin structure. Number 3, are the deal terms attractive? And number 4, does it fall in line with their thesis for where the world is heading? And we need all 4 to be true. But if all 4 are true, we invest. If we're not sure about some things yet, we wait until the next round. So happy to review it. Okay. Later. And I guess this can kind of fall here. What are the current market conditions in for tech startups? I guess falls in the macro as well. That's from Jeffrey on LinkedIn. It's not a great. Well, it kind of sucks in general to be raising money right now. A lot of the late stage investors have basically exited the category completely. The crossover investors like V1 and Co2, many people like SoftBank and Tiger have decreased the number of investments they do dramatically. Most VCs are preserving cash to protect their very best companies, and so they're not writing many new checks. The volume of deals has declined, the check size has declined, valuations have declined. So conditions in a way look pretty bad, or are very bad. Now, the flip side of that is if you actually are building a company, I think it's a very good time to be building a company. Yes, you're raising money at a lower valuation, but there's also a lot less competition. And there's a lot less competition directly in your main category. You don't have 27 clones going after you. But also, there's a lot less competition for talent in general. So it's easier to recruit and find the right people that you need. And I suspect that if you do win the category, or if you're probably winning the category is much greater. And when you do win, you're going to do extremely well. So I think it's an amazing time to be building companies, even though it's hard to raise money. But if you do succeed because you have a compelling story, you're going to do better than average. And in fact, the most interesting or successful companies of the last decade were all built in the 2008 to early 2010 period. And I mean like Uber, Airbnb, Instagram, Slack, WhatsApp, etc. So I think it's an amazing time for building companies. How fast VCs can recover and start investing again like it's back in the roaring 2020s, considering hundreds of billions in cash are still in the sideline. That's from Serge at X3EM on YouTube. So first of all, the amount of cash on the sidelines is overestimated. And the reason it's overestimated is a lot of the LPs were telling the GPs. So the LPs are the people that are investing in the venture funds, right? The pension funds and the family offices and the endowments. So they're saying, don't you dare call capital. We're over allocated here. We don't want you to be investing. And so that capital is not nearly as available as you might think it is. Also, a lot of the funds are preserving that, you're keeping that capital to save their very best portfolio companies. So they're not very excited about writing new checks. Now, to get back to a booming period, you're going to need the macro to improve dramatically. We're going to need to see a declining rate environment. In other words, and I don't expect rates to decline until we've tamed inflation. So I'd say at the earliest, 2024, we can start seeing maybe we've reached a peak in rates and maybe it's starting to decline. And I don't suspect we're going to see a interesting, fun recovery for until 25, 26, etc. So it's a whiles away. That said, I'm very bullish in the long run because at the end of the day, history trumps macro. I'll talk about that when I get to the macro piece. We are at the intersection of macro and startups right now. Okay. Going in the questions, making sure I didn't miss any of them. We're seeing, so Hunter Rudd on LinkedIn, we're seeing capital holders push maturity requirements down on earlier stage startups, such as pre-seed VCs and angels demanding traction, such as revenue or user growth. The long-term impacts of this approach, requiring startups to look more like more mature, profitable later stage companies. We'd like to see investors do differently, even as investors remain hesitant in the economy. So Hunter, I'm not sure this is necessarily a bad trend. You can build startups these days for very, very cheap. I wrote an episode of how you build an MVP for 20K. I think it was one of the very first episodes I made on playing the unicorns. I think back in the day, prior to the 2020, 2021 mania, when people would raise an angel round or a pre-seed round, maybe they were live, maybe not. There was very limited traction. But with the 750K to $1 million they were raising, by the time they got to seed, we would expect them to have in a marketplace with a 15% take rate, like 150K a month in GMV with unit economics, etc. And we would be investing in scaling that. And that kind of went out the window the last few years, where you would get to seed and people raising insane amounts of money with really no product market fit, no traction. So actually, remember, VCs want to fund growth, and that makes sense. Scalable, profitable, sustainable growth, ultimately, even though they kind of forgot that for a few years. And so this is not bad. Now, I don't think at pre-launch we could expect that, but pre-launch we can have a conversation with founders about how much market testing have you done? How much have you done landing page analysis? Do you have an estimate of your CAC? Do you understand your unit economics? And we totally expect you to have done that. And so I think that's legitimate. But no one's expecting profitability, obviously. And if they are, you're talking to the wrong people. What are you recommending in portfolio companies for 23 and 24? So I'm hoping, or I'm telling them, try not to go to market and raise capital in this environment. Cut burn, decrease growth if need be. If you don't need to be growing 3x year over year. If you're growing 50% at enough scale, or 100% year over year, it's enough. Focus on unit economics, cut your burn, and ideally don't go raise money from VCs in 23, 24. If need be, do an extension, typically flat to the last round, to get you over the hump to either get to profitability or to not have to go to market until late 24 and 25. And most of the investments we did last year were seed extensions, A extensions, B extensions, flat to the rand before. In fact, one company we invested in was probably the A3, the third extension to the A round at a flat valuation, even though they probably had quintupled in revenues. It was never a real round, so it was like they're raising 2 or 3, just enough to get to the point where they don't need to raise in the next 2 years, basically. And I suspect if you can avoid raising the next 2 years, avoid it. If you're hesitating in more growth and getting the profitability, and the fear greed toggle, you need to be in the fear mode right now because that's the way the market is. Wookie TV, are you familiar with the video on demand market? Not really, honestly. We don't focus on media very much. Recent favorites in the prop tech sector from Jason and Facebook. I have to think about that. About the recent. I have a lot of favorites, but I'm not sure how recent they are. I mean, look, we're investors in EasyKnock. We're investors in a lot of different models in prop tech. I'd have to think. Yeah, I'd have to get back to you on that one. Maybe I'll post the answer on when I write the transcription of this. New payment companies are going to scale win in the platform market. Roger on LinkedIn. Well, in payments, you have really established incumbents right now, right? Like you have the Stripes and Squares of the world. In marketplace payments, you also have very large companies that are already established. So now, is there room or will there be new payment companies in the future? Absolutely. I mean, there are a lot of things that don't really make sense to me today in the world. And the fact that you have this like Visa, MasterCard interchange fee tax on all transactions makes no sense. And if you look at what's happened with Pix in Brazil and UPI in India, where you essentially have virtually free payments, which allows microtransactions, etc. Something like that at some point, though I don't think in the next 5 years, to be clear, will come to the West and will be an amazing, dramatic game changer, and new payment companies will emerge on top of that. What emerges in the meantime from a payment perspective? Unclear. I mean, we've already seen like buy now, pay later emerge and get pretty big. I'd have to think more about it. But like, do I think other payment companies are emerging to replace Stripe and the scale they have anytime soon? Yeah, probably not. Okay, which brings me to macro. Luke, outside of investing in private markets, how are you deploying your personal capital against this macro environment? So I use a barbell strategy. By the way, I use this barbell strategy at all times where on the one hand, I have what others would consider to be a high risk, illiquid, high return strategy. And the other hand, a cash strategy. And I toggle the percentage between the two based on my read of the macro. So right now, I would be reasonably large in cash. And by cash, I would just basically buy T-bills, right? Like, if you had 20% of your or 30% of your net worth in T-bills, you're earning 5%. Not quite countering inflation. I'd keep it in US dollars, by the way. I think in a bad macro, the dollar does reasonably well, especially in a continuing rising rate environment. Probably different if you're in Europe. They haven't raised rates enough, so there's probably room for the euro to keep growing. But I'd be reasonably cash rich, put it in T-bills, earn the 5%, that's safe. And the rest, I have it all in basically private and liquid early stage, like seed, pre-seed, A, B tech startups. Because here we've been compounding for the last 24 years at 40%. Now it's completely illiquid. It's money you can't need because you can't exit and you don't know when the exits are coming. But this is done extremely well. I don't own public stocks, crypto right now, or anything else because I sold almost everything between November 21 and January 22 when I felt when rates started rising and I felt everything was overvalued. I usually don't have many of these assets anyway, just because I usually am the cash tech startup strategy. I would definitely not hold or buy real estate right now. Obviously, rates are rising, prices have not reset yet, and I suspect we're going to start declining pretty dramatically. Now, if you look at my personal wealth allocation right now, it's probably it's underweight. It's less cash than I would like. It's probably 15% cash, 15% real estate. But my real estate is not investment. It's consumption. It's the places I live in, and I don't consider them to be. They don't generate. I don't intend to sell them. I don't think I'll make returns on them. And that's my place in Tricks and Caicos, in Revelstoke in Canada, where I am right now, and in New York. And then 70% tech startups. And usually when I own public stocks, it's because one of the private companies I held went public. But usually I sell when the lockup expires. A few exceptions to that rule, like I kept my Delivery Hero stock all the way up and down. I still own Delivery Hero. I'm very bullish on food delivery in the long run. I think they will do extremely well. I think people have thrown out the baby with the bathwater when they look at food delivery and they haven't understood the nuances between the models. But yeah, I'm very bullish on that one, and I'm keeping the stock. But beyond that, yeah, I don't have amazing advice except to be cash rich, which I think is useful on multiple levels. Right? Because A, you're earning the 5%, which is not bad in today's world, even especially as inflation is starting to decline. Two, people underestimate what you can do with this cash in bad environments. So when cash comes at a premium, you get opportunities that you wouldn't otherwise expect. And so imagine we have a macroeconomic blow up at some point in the next year. A lot of assets are going to be very cheap, be they public stocks. And look, in the long run, would I be a long-term owner of Amazon and Shopify public stocks or Google at the right prices? Yes. By the way, probably not the medium ones because they are more likely to be regulated, like the Facebooks and of the world. So I'd avoid these. But is there a price at which I would put some allocation in there? Yes, absolutely. But are we there yet? No. By the way, 0809, there were people that were facing margin calls because people take margin, which they should not. Do not. The only leverage you should have is like mortgages and fixed rate mortgages on your real estate. Those are okay. I wouldn't get a fixed rate mortgage at today's rate, but back in the day when rates were low, that's okay because it's non-recourse. If your real estate value declines, you can just hand over the real estate to the bank, and you're okay. You don't lose all your other assets. All other leverage is risky because it puts you you could be in a liquidity crisis. And so there are people that are facing margin calls. I got a call from an acquaintance of mine that said, "Hey, I bought this apartment for $10 million. I'll sell it to you for $3 million if you buy from me in 24 hours cash." Now, I didn't have the balls to do it. I definitely should have. But these opportunities do happen in these bad macro environments. If you're cash rich, you can take advantage of them. And so you can actually make a lot of returns in these moments. So right now, I'd be way more cash rich and put it in things like T-bills at 5%. Other question from Luke. What is your prediction for when the residential real estate market bottoms out in the U.S.? So there's a lag in residential real estate pricing in the U.S. because a lot of people are on 30-year fixed rate mortgages, which is good for them, which means that they are not seeing increased prices or decreases in affordability as rates have gone up. Rates have essentially gone from 2.5% to over 7% on 30-year mortgages. So housing affordability has completely collapsed, which will lead at some point to a decline in prices. And we're already seeing declines in prices in the hottest market. So real estate prices have fallen like 10%, peak to where we are now in like places like Austin, which were overly hot. Now in many cities like New York, etc., it hasn't corrected yet. It'll take a while. There is a lag, things like public markets for stocks or bonds reprice immediately. Here, there's a expectation. People are loth to sell at a loss. And so what first happens is liquidity dries up, the number of transactions goes down dramatically, and eventually prices fall. Now, the only exception to that is the markets that were being driven by like froth and speculation, like Austin, which decline much quicker than others. So we're not yet at peak interest rates. I suspect they'll peak sometime somewhere above 5% in 23, 24, and we'll stay high reasonably long. So probably prices start falling, and decline until, I don't know, 24, 25, 26, until rates start declining again. So it'll be a while, and it'll be a lag before they start declining. So for now, renting is probably the better opportunity rather than buying, especially at these rates. The and what's actually funny in the short term, because more people are renting, rental prices go up. It only takes, and then it takes a while before it starts falling as well. Serge on YouTube is asking, what percentage do I keep in crypto? So the answer is it varies, and it varies dramatically based on where we are in the market. So I owned a lot of crypto since the early 2010s, and I sold usually near the peaks or the tops, and so I sold a big chunk in the last, I don't remember if it's in 2017 in whatever December, right before I was hacked actually, so that was pretty fortuitous. Then I bought a lot again in the crisis, and I sold most of it in the last crypto winter in 18, 19. Sold most of it last year. Well, no, 2021, early 22. Now I own reasonably little, like a couple percentage points in crypto. I am going to go back into crypto when I feel that we've really bottomed out. So right now, of course, the market has recovered to some extent, but I think there are a lot of things that explain that. Where like people were taking tax losses at the end of the year, so they're selling off, and they rebought a lot of these assets. There's still a lot of overhang on the crypto market, both exogenous and endogenous. So there's a macro risk where rates are still going up, and crypto is trading like a risk asset. The more interest rates go up, the more it should decline in value. By the way, same I think of tech stocks in general. So I'm not sure why there's been so much. Well, I have explanations for why there's been a bounce back, but usually fighting the Fed is a very bad idea. Number two, there's there's general macro risk. So in general, the macro environment is risky for crypto. Number two, I mean, regulatory, you name it. Then there's endogenous risks. It's still not completely clear to me. The Genesis liquidation ultimately leads to what happens to DCG, what happens to the BTC. There's always like the threat of Binance being regulated in a negative way, or Binance, itself collapsing. I mean, that would be pretty existential. Not existential, but like would lead a massive crash. USDT and Tether in general, like there's always been smoke around it. What ends up happening there? I'd like more of these things to be settled before I go back in crypto. Now, would I have like 10% or more of my assets in crypto at some point? Absolutely. And I do intend to go long. It's just of the percentage that I want to allocate to crypto right now, I'm 4% cash, 96%. Sorry, 4% crypto, 96% cash. And I will move in when I feel we are at a bottom, which I don't think we're at yet, and I may miss it. By the way, that's why I still have a few percentage points in crypto, and we bought at like whatever ETH at like 1,200, etc. But obviously, we're much more sophisticated investors than that, and there's like 50 assets that I buy. But right now, mostly on the sidelines. We'll increase it to 10%, maybe a bit more over the coming year or two, as I feel, probably before rates start falling. Once rates start falling, and once we near the BTC halving, I will make sure to be deployed. And so that's mid 24. But do I intend to deploy aggressively in the next 6 months? Probably not, unless there's a massive correction and settlement over your regulatory regime and environment, and more clarity on what happens with Genesis, DCG, WBDC, USDT, and Binance, etc. So TBD. I obviously will need to make a call as to when is the right time to pull the trigger. But and I'm sure I will at some point, but not yet. Right now, I'm doing the analysis, thinking through the trends, and paying a lot of attention. And of course, building the dashboards, of which I've shown some of it before. See if there are any macro questions I missed, and then we'll go to the next category, which is other. So Give me 1 minute reading. Sure, I didn't miss any macro questions that I would like or weren't answering, but it seems like pretty much covered everything. Uh, okay, so other. Wait. Wait. Ricardo's asking. Do something. It's the main question that one VC has. I mean, the basis of our project are blockchain and NFTs, and you are in Spain. We are in Spain. Your VC in New York. Your VC checks the project. Not sure I understand. It's not great English, but we write small checks, right? We don't lead. We write like 200K, 250K checks alongside others. Where people are based, in our case, we're indifferent to that. And we evaluate projects and their merits. Provide the deck, see if it resonates with us and your traction and your economics and team, and if it meets it, we will invest. Okay, other. Sarah, what are the most extreme sports that François did? Actually, that's... So I've done a lot of crazy things with François. Let me share a few of them. So I took François, this is at the training session in Finse, Norway, where he was with me while I got trained. This is him. Whoops. This is him in his little polka where I'm pulling around. I've mountain biked with him. I've hiked with him. So mountain biking, attaching him in the handle raise up front. I want to kite surf with him. I haven't, but I'm in Turks. I took him. I didn't have my back harness where I can attach them in a way that doesn't get into the line. I'm going back to Turks in April, and I intend to not forget my back harness where I can put François in. So I intend to kite surf with François and see if I can pull some jumps with him. But in the meantime, the craziest thing so far is I took him heli skiing. So this is us in Nieku in Sweden. We had just landed the helicopter, and I put him in the front harness, and this is us heli skiing there. You can't necessarily see if I can zoom in. He's right in front of me here, a little bit pixelated. But yeah, I took him heli skiing, and he loved it. He was like, "Vite, vite, vite!" So it's super fun. He is a lot like me. He likes speeds. He likes adventures. He likes going with me everywhere. I intend, the kids can be a complement of your life, right? Like you bring them along and all the adventures you go on, and it's super, super fun. So Jean-Baptiste, you grew up in France. Why did you leave the US for college rather than stay in France for it? So I obviously finished high school in France, in Nice at the Lycée Masséna. The reason I left France is I just felt the opportunities in the US and the ability to live the American dream was much greater. Like when you graduate college in France and you're in your early 20s, the opportunities felt, and we're talking now early 90s by the time I would be, or mid 90s when I'd be graduating college, just felt more limited. And in the US, you could go and build a startup. You had role models like Steve Jobs and Bill Gates. You had you could go work for McKinsey and go Goldman Sachs. You'd be very successful early on. And yeah, I wanted to live the American dream, and it played out that way. And I'm very glad I did. The opportunities are so much greater, especially coming from Nice, right? Nice is a tourist town where like literally the son of the baker becomes a baker and the son of the butcher becomes a butcher. And most of the jobs are in the tourism and services industry. So it felt like the land of opportunity. And when I got to college, it was even better than I expected. Like you have more Nobel Prize winners on the campus of Princeton than you have all of France, and they're your professors. And you can pick the classes. Like in France, it's so you don't choose anything. And in the US, you have this book with all the classes, and you can pick them. And I went completely crazy. I studied the Peloponnesian War and the Roman Empire and organic chemistry or molecular biology and vector algebra and multivariable calculus and Mandarin, Russian literature. Like you study everything. curiosity. You can fulfill your curiosity. Jean-Baptiste, what drives you? What do you do? What do you do? Well, driven a lot by curiosity, like in fulfilling my curiosity, but that is not my purpose. Ever since I was a child, I've had a sense of manifest destiny and purpose, and then my purpose was to make the world a better place, and to and it was became very clear to me that the correct vector for me to do that was technology. I found that the political process is corrupt and corrupting and broken and not compelling, and the amount of power you have is very limited, or it's in a very well defined specific box, and it's way more compelling to use technology, which is deflationary, and where founders are basically seeing broken user experiences and they want to fix it, and to go and attack that. And so my purpose is to try to solve the world's problems in the 21st century. And I think it's like inequality of opportunity, climate change, and the mental and welfare crisis through the vector of technology, and especially marketplace and network effect businesses, because I think they're compelling. And I think I'm very well suited to do that, and I'm in a position to do that. So I would argue I am living my purpose and doing things that I love on a daily basis. I mean, meeting extraordinary founders and helping them fulfill their dreams and building fun stuff is amazing. Charles, what question have you never been asked that you believe someone should have asked you by now? I have not. I have not. I need to think about that one, so won't answer that right now, but I will get back to you. Okay, let me go back to all the different questions. Hi, Diego. Long time no see. Okay. Let's see. Congrats on your fund. Antarctica does not look like a big market. Antarctica is a tiny market, De Niro. Antarctica Union Glacier is 500 visitors a year, 70 of whom walk to the South Pole. Many and this year of the 10 expeditions who try to make it, they had people drop off in all of them. It is a tiny market. Plus, it's only live for 2 months. And now it's probably bigger if you include the cruise ships that are going to the edge of Antarctica, but it's not really Antarctica either, even though it's defined it. They will call it Antarctica, but like the adventure travel to Antarctica. But I ran into like Alex, the guy from Free Solo there. It was like hardcore adventurers. So this is Alex Blandino from Facebook. Why did you leave Silicon Cabarete? So I was building or trying to build a huge development in Cabarete in the Dominican Republic. I bought 200 acres of land, and actually, let me share some of this. It looks interesting. And my vision was, let's bring founders there. Let's bring thought leaders, and let's see if I can be in a position to build an amazing playground where people can, I can live there part of the year, and we can bring founders, virtual leaders, artists to go and build and do fun stuff, and show you what I planned. Okay, so sharing my screen. So this is Cabarete, kind of like 5,000 people, and I bought all of this, which is called La Boca. There's like a mile of beachfront. It's a couple hundred acres. And I wanted to build a post-contemporary place. So with 5%, one second, open up. With 5%, use 5% of the land to build super postmodern, integrated in nature infrastructure. So this is the main house. It's like a 12-bedroom house of glass and wood. This would be the game center. These were like some of the guest villas, but they were like bungalows. This is the game center here, and here you have like the boathouse. This is the office center where I was building 3 of these for 240 people, where it's a co-working space where people can go build and live and work and build their startups. Probably wouldn't live there, but like you would incubate there and then move to wherever city you were building for. The spa. It was a huge development. The problem is, while it made a lot of sense, the and the local community, it was great for the local community. It wasn't one of the variables I'd not considered was the environment I was in and the fact that it was a corrupt place, right? The mayor wanted bribes, the minister of environment wanted bribes, the minister of tourism wanted bribes. There were like squatters on the property who wanted bribes. There was a local mob wanted bribes, and I didn't want to bribe people. Now I knew what it would take to make it happen, right? Like in order to make it happen, I needed to act like a real estate developer. I needed to go and fund the campaigns of the mayor and the minister of environment and tourism on both parties, such that they would be supportive of the project, and whichever of them was in power would support the project. I didn't want to pay bribes. I didn't want to do that. I'm like, look, it's better for me, the world, if I allocate my time to build tech, to invest in tech. This is where I'm going to get the most leverage in terms of making the world a better place. Even though I knew what I needed to do, I didn't want to do it because I didn't think it was a great allocation of my time. I'm like, this is fantastic for the country. If they're not willing to see that it is fantastic for the country, I'm not going to make the effort. And that's why the fact, by the way, I paid for the education. I mean, I did a lot of crazy stuff. I'll show you more of the things we did there. I paid for the education of 10,000. Actually, open this up. Some of the things we did there. Okay, so let me share my screen again. So help pay for the education. I built a tech center for kids. That's in Cabarete, where they can come and do their homework. Build the most successful startup in the DR's history. We built a big tech team there. I moved actually a lot of my programmers there, but we also hired a lot of locals. With the companies doing like over 100 million in sales, not targeting the Brazilian market, but the tech team is there. I'm a donor, or one of the largest donors, to the Dream Project, where we fund for the education of 10,000 kids, K through 12. I brought lots of people. We hosted tons of conferences. I mean, we're doing a lot of amazing things. I bought land and built houses for all my staff, or if they had houses, I improved them, and I gave them title to it. I did that all for free. And when there were floods, I would donate food. I would donate mosquito nets. I mean, really try to be a great member of the community. Ultimately, though, between, we got attacked by gunmen with shotguns. There was a shootout in my garden. All of my guests at some point got some tropical disease, from Zika to chikungunya to dengue. One of my dogs got poisoned. Every time we get permits, someone really get in the way. There is opposition to the project. I mean, there is enough. There's enough basically corrupt and violent opposition that it didn't make sense to go for it. I spent 7 years trying to make it happen. And I spent $7.5 million trying to make it happen, getting all the permits, getting all the environmental studies, and etc. But at the end of the day, I was not willing to pay bribes. And if you try really hard at something and it doesn't work, you move on. And so I moved to Turks and Caicos in early 2019, and it's the best decision I ever made. Beyond happy in Turks and Caicos. Now I don't have 200 acres of land. I can't build something that big, but it's okay. It's been the enemy. The best is the enemy of the good, and something you can enjoy right now and use it. And I'm using in Turks and Caicos. I'm already bringing. I'm doing tech conferences and enjoying it and playing paddle. All the things I wish I'd had in for 7 years in DR. So I kind of wasted 7 years of my life in the DR. Having learned that lesson, I'm not going to make it again. So I'm never going back to the Dominican Republic, even if the current political environment is better, because it may change again. I should have considered and taken consideration the corruption level of the country. I mean, and I talked about like the biggest things, like we got attacked by people with shotguns or the shootout in the garden. But many of my guests, there was like got mugged, there was attempted rapes. I mean, it was a pretty big disaster. So I'm very happy I left, and sadly for the DR, I am never going back. Go back to more questions. Was my trip, I guess it was to Antarctica, inspired by the book Great by Choice by Jim Collins? No. No, more the Shackleton adventure. And so while I was in Antarctica, I read Shackleton's book, Endurance, which is insane. I mean, they tried to go to the South Pole in 1915 with 1915 gear, and their ship got crushed in the ice, and they spent the winter in the ice, like 18 months there, had to make a makeshift raft to, and long story short, an extraordinary tale of survival where after like 2 years, they all survived and they all made it because of Shackleton's leadership and the entire team's resilience. So I actually read that while I was doing my expedition. Completely worth reading. Amazing, amazing example of resilience. And when is François next? Ask me anything. As soon as he speaks a little bit better, Cyril, it could be fun. Okay. This experiences are more gratifying than material things. Totally agreed, Nero. Okay. In later comment, what are you reading at the moment, or recommend a good book? That's from Dario. I am reading a Hero of Two Worlds, which is the biography of Lafayette, who basically played a crucial part both in the American and the French Revolution. Highly recommended. Amazing biography. And for fun, if you haven't read it yet, read Project Hail Mary, favorite sci-fi book of the last 2 years. If you want a light read on the sci-fi genre, that's fun as well. Yeah, I would read the by John Scalzi, the Something Preservation Society. John Scalzi, the Kaiju Preservation Society. Super fun. Just finished it. I will write a review of it shortly. Elizabeth on Facebook. How do you manage family life, adventure time, and work commitment? I'm very good at so I structure my time. My days are highly structured in like 30-minute increments, and I try to be productive. And not multitask, really monotask. And I outsource as much as I can. I have an amazing virtual assistant in the Philippines, which manages my online life. I have a estate manager who manages my offline life, and I have an amazing team that surrounds me. But I like to. So the way I structure my life is I'm in New York, and the best times to be in New York, so the fall and the spring. So I'm in New York like April, May, June, and September, October. I'm in Turks and Caicos in November, December, and like March, and I'm in Revelstoke in January, February, August, and then I go see my family in Nice in July. Now I work at all these places. It's just what I do after work varies, and so that gives me my work-life balance. The adventures I go on are maybe 2 weeks a year, so it's not a huge time commitment from that perspective. And I usually work most days, even if I'm like right now I'm in Canada. I'm heli skiing, so I'm taking a few days off. But I'll do emails before and after to make sure that I'm on top of things. And I also take days off from skiing such that I can work like today and tomorrow. But no, I think I'm very good at balancing work and life and having fulfillment, working hard, and yet being in a position to have fun and playing hard and being present with François. In fact, I think it's one of his superpowers is like being really good at like leading an epic life. Roberto, you should go and get on the Tim Ferriss podcast. I'd love to. If he invites me, I will definitely say yes. Or if Joe Rogan invites me, I'll definitely say yes. Not sure I'm quote unquote famous enough for them to invite me though, but I'd be delighted to be on it. Serge at X3EM. How do you manage to read 1,500 books per year? No. I read 50 to 100 books a year. No. I read, 65 is probably an average. Probably read more. It's closer to 100 these days because I read a lot of fun sci-fi books, of which there are many books in the series. I'm reading like Starship for Sale and Backyard Starship, and there's like 10 books in each series, and I'll read all of them. But no, I'm not reading 1,500 books a year. I'm reading 50 to 100, but I spoke probably too fast, and you heard 1,500. Okay. Let's keep going on the questions. What was Ahmad? What was my fundamental inspiration behind starting OLX? I'd wanted to build marketplaces, and I'd seen what Craigslist was doing in the US, and I thought I could do it a lot better. And so I wanted to do a spam-free, scam-free, mobile-first, female-friendly version of Craigslist, and I thought it could really impact society, especially in emerging markets where there was no trust and no payment and shipping services. And yeah, that proved out to be right. So in hindsight, I should have built that first. My first company was an eBay for Europe. Um, should have started with classifieds directly. It's actually way easier. You don't need to have payments and shipping. But very happy I built OLX. It was a company I was meant to build, and it is still playing an essential role in the fabric of society. You know, the UAE and with Dubizzle and the rest of the Middle East, and in Poland and Romania and Ukraine and all of Eastern Europe and Brazil and all of Latam, and of course in Southeast Asia and India and Pakistan. Absolutely huge part of fabric of society and helping people there lead better lives. So, company I was meant to build, and I'm happy it's still doing really, really well. Uh, Diego Casinera. What's easier, a product meeting or your son's bedtime? So, Diego worked with me and was one of the tech geniuses behind OLX. My son's bedtime is very easy because I'm a very laissez-faire dad. His bedtime is whenever he's tired. So it's very easy. When he wants to go to bed, he goes to bed. Sometimes it's 7 p.m., like last night, and sometimes it's 11 p.m. because we're having so much fun. So it's actually really, really easy. When he's tired, he basically self-regulates and he puts himself to sleep, and it works well. But I also won the baby lottery. He's happy. He sleeps through the night. He's always having fun. I mean, you can see he was like here for like a long time, just self-entertaining, and it's pretty amazing. Now product meetings. You remember our product meetings. I still play with product a lot, and I'm playing and building product in a startup right now, and I love them. To be honest, neither is that hard, though. Perhaps back then I was more frustrated than today and less patient than I am today, and perhaps not as good a manager. But no, I do give a lot of feedback and direct feedback, but it's going well. But funny question. Okay. So Andy Ives, I'm CEO of Made Trade, a curated marketplace for ethical, sustainable goods. Followed FJ Labs, but I don't think I have a direct connection. Just send me a direct LinkedIn on LinkedIn message. I include the deck and whatever information I need in order to evaluate whether it's for us or not, and we will get back to you. So we do look at cold inbound. Let's bring back Silicon Cabinet. No, Jeffrey, sadly, I have decided I'm moved on from this. I'm extremely happy in Turks and Caicos, and I'm not moving back. Serge, would you rather build an island somewhere in the ocean? So actually, it seems like a tempting idea, like you're building Necker Island, but it's actually not. It's not ideal. So no, I would not rather build an island. Once you need to ship things to an island, it makes it 10x more expensive to build anything. Getting guests there is extremely complicated. Right. The reason I'm in Turks is there's a direct flight 3 hours from New York. There's a 1 hour flight from Miami, and you're 20 minutes from the airport. People will come for the weekend. It's highly convenient. People with kids will come. So it's less expensive. It's more convenient. It's more convenient to build, to get labor, etc. An island sounds sexy or like a good idea, but the practicalities of it are extremely complicated. If you forgot, you don't have a supermarket in your little island, so you need to go to another island or whatever, the mainland, to go shopping. If you forget milk, it's another hour by boat, an hour back. It's extremely inconvenient. So no, I would not. I don't think an island is a good idea. Peninsula is way better. Axel. go to school with a descendant of Lafayette. Really cool. Why do you believe that a team is better than a solo entrepreneur to start a business? I don't think it's necessarily better, but the statistics say that on average, two person team, two founders do better than one because it's extremely lonely to be a founder and it's extremely hard. And so having someone to bounce ideas with is great, and someone to support you in the difficult times. And at the same time, being like there's infinite work to do, and so like splitting the work and is extremely good. Now, obviously, you need to have the right partner, right? One of the main reasons startups fails is people fall out with their co-founder. So if you have an amazing co-team member, great. It'll be better than if you're alone. But if you break up with your team, if you're a co-founder, you probably just killed your startup. So it is better as long as you make it work and you picked the right person. Eli, what do you think of Jordan Peterson? I actually don't know who that is. So I can't comment. I will research who Jordan Peterson is, and I will and get back to you on this. Lazaro Fuentes, we need this list prioritized. Well, I kind of try to prioritize the list by category, and so that's why I went back to everything. But yeah, I think it's pretty good, and I think did an okay job at this. Suraj on LinkedIn, content for smart vehicle marketplace for India. Okay, great. You'd like to be interested. Maybe. Again, contact me if you don't have direct contact or through people we know and together. Send me a LinkedIn email with the deck, and we will review it. Since you're talking about Antarctica, I wanted to ask you these things. You refer to Richard Byrd's expedition. I do not know Richard Byrd, so no. You come across crazy experiences. I think there are research labs there, and that you weren't allowed to visit there. So we were not. So we went to South Pole Station, where there's a U.S. base, but we were not allowed to visit just because they had stupid COVID protocols. And I think during the pandemic, like someone went there and like the entire base got COVID. And so since then, they still have these COVID protocols in place. And so you're not allowed to visit. Usually you are allowed to visit. They are doing a few interesting experiments. They have a few telescopes. They have a neutrino detectors there. Now, most people hold bases there, I think, more for geopolitical reasons and being able to claim territory in the future rather than for doing fundamental research. That said, the that said, in the U.S. base, they were doing real science. The neutrino detector is a big deal. Some of the telescopes are a big deal. Actually, let me take 1 minute, and I'm way late for my next call, but hopefully they'll understand. Let me show you photos of what that looks like. I mean, the neutrino detector is underground, so you can't really see it, but you can see photos of the telescope there. Yeah, there. Oof, full screen. So this is the telescopes. There are two different telescopes. Actually, don't remember what the difference between them is. That's South Pole Station, the U.S. South Pole Station. This is where they have a globe at the South Pole, by the way, with all the flags of the countries with permanent bases, and this is how you fly out of there. Let me go back to... Yeah, so that's the globe, which is actually not exactly the geographic South Pole, but they've decided that you have this pole there. The actual geographic South Pole is like 100 feet away from there. There's just a flag there. So kind of that's actually the geographic South Pole. By the way, the magnetic South Pole is a completely different location. And it moves every year, and we seem to have a polar inversion happening right now. We're in the process of it. It's going to take hundreds of years, but it's moving away by like 40 kilometers every year. So you got base product, or do you follow the validation model of product development? Both. So when you are larger and you have traffic, you do multivariate testing. But all VCs will say, yay, do A/B testing. Doing A/B testing when you have 5 users, you're not going to learn anything. So you start by doing interviews with your clients and figuring out what your product segment is, and then you build what you think is best for them. So you start with gut. Once you have scale, then you do multivariate testing. Woku TV on YouTube. Do you ever invest in single founders? Absolutely. We do invest in single founders, and if the team is going to split up, the single founder is better, even though on average multiple founders are better. And the books, we need the lists of books prioritized. So actually, Lazaro, I do kind of have that. Whoops, let me change the view to browser. Let me go to my blog. Second, I shared my screen a little bit early. Up here, categories, books. I mean, I call it summer book recommendations, but really I have like all my beach reads and page turners that I like then. I mean, there's a few years old, but they're still fantastic. And nonfiction, I would definitely recommend all of these books. They're absolutely amazing. If you haven't read them, read them. And then every year, if you go to my year in review, I write about the best books of the year that I read, both fiction and nonfiction. So if you go, I need to add 2022 here. So you go to 2022 year in review. I write the books that I recommend, which are here. Oh yeah, absolutely recommend this one, which is King, Warrior, Magician, Lover: Rediscovering the Archetypes of the Mature Masculine. And even though I recommended Backyard Starship here, I probably, as a fun read, I probably should have also done the Kaiju Preservation Society. So they are there. I will write more book reviews in the coming weeks and months. It's definitely part of my to-do list. Carlos Alatorre, with reference to your career or personal experience, what do you consider to have been your most significant mistakes, and have you learned from them? So I've made a lot of mistakes, right? Like there is no such thing as a success going like this. It's always like this. Just happens that it goes a little bit more up than down. But look, my first startup, I picked the wrong VC. I picked the VC that gave me the most value, the highest valuation, and the most money. And I didn't realize our interests were not aligned until much later, because he was the wealthiest guy in Europe, now one of the wealthiest people in the world, and he didn't care about making money. He didn't understand the category I was in nearly as well. I didn't pay enough attention to I guess at that time there were no standard legal docs, so I didn't have a tag along or a drag. I couldn't force a sale, like a lot of terms that are standard now, and I didn't even know them because I was 23 or 24. I've made mistakes of selling too early or not investing startups I should have, even though my instincts were telling me to. Because so no, I've tried to learn from all these experiences. Your most significant mistakes. I don't know. Like they all look. I failed dramatically. I went from zero to hero when I was like 23, 24, 25, back to zero again after the bubble burst. And failed extraordinarily publicly and dramatically, but actually probably a good thing for me. I would have been really arrogant and condescending, which I really was as a kid and younger, had I not failed and had eaten humble pie. It made me a better person. It took me a long time to become more well-rounded. Like I was single-minded, like until I was like 27, I only cared about intellect and success. And I had no real friends, no girlfriend, and was not well-rounded at all. But do I regret that? Not really, because if I wasn't I wouldn't be where I am today if I had not gone through that. So it's hard. I'm not even sure it was a mistake per se. I just had François when I was 46. I'm not 48. He's about to turn 2. It's late to have kids, but is it a mistake? I think it was right for me. It came at the right time in my life, and I feel young and full of energy, and I'm excited to have François now. So a lot of things are hard to say if they're mistakes or not. Now, clear, explicit mistakes like wrong VC, wrong not negotiating the term sheet or the term sheet correctly. I've learned from those mistakes, and now I have teams to take care. And part that's why frankly, a big reason I have my business partner who cares deeply about these things is that lesson from back in the day. Because I can't be bothered with legal documents, still can't be bothered with them. But now I have partners who do care and help me deal with it. So no, I think as people have said, right, like fool me once, shame on you, fool me twice, shame on me. I do think I've learned from a lot of these mistakes. On the personal side, trying to think through big mistakes, yes. Cabarete, I spent too much time there. I should have learned quicker, right? Like, I went there late 2012, early 2013. By 2015, I should have moved on. I should have moved on to Turks immediately. I did not put in my variables for why I picked Cabarete, like corruption. Having had a bad experience in Belize, I thought DR was way more and more rule of law, but was still not there. So definitely a life lesson, core life lesson that came out of that. But by the way, both professionally and personally, the best is the enemy of the good. Something you can enjoy today and use and make the most of. Something you can build today is better than the ideal, perfect place in the future. In these 7 years, I did not have a place to play paddle and tennis, and I lived in a very beaten down house, that had like no AC and rats and cockroaches, etc. I mean, like it was fun. It was an experience in its own, but my family hated it. It was, and it didn't allow me to like express all the things I wanted to do, and a place where you can actually, even though it's not exactly your perfect vision, that you can take advantage of immediately is way better. So definitely core life lesson. The best is the enemy of the good. And while you have the good, you can actually improve it and get to the best. So, which I'm doing right now in Turks. It's not exactly my aesthetic setup, but I'm building it into the playground that I've always wanted. I bought a house, didn't have a paddle court. I now have a paddle court, and I love paddle. So yeah, I think that's basically it. I think we've covered all of this. It's been a long episode. Thank you for bearing with me and for being there. I'm glad you also got to see François, who's absolutely epic. I'm completely biased here, but I think best baby in the world. And I look forward to upcoming episodes. We have a lot of fun episodes coming. I talked to most of my other team members on the expedition in Antarctica, and they're welcome to, they're excited to come in. So we're going to have Kevin Ryan from AliCorp. We're going to have James from Prettify. We're going to have like one of the doctors, Dr. Jack, who was on the trip. So it's going to be great. Not coming anytime soon. I'm still like traveling. So I need to be in a place where I can host these, and the calendars need to align, but it should be fun. See if there's any last minute questions, but I think this was great and this was fun. And thank you for joining. I love the interactivity and the conversations we had from all the different audiences. And thank you all. I will be posting this and all the questions we covered in the summary in the coming week or two on my blog. And yeah, we'll take it from there, and see you in a few weeks whenever I do the next one. Thank you.